Okay, let's take it to some earnings, where software firm IGATE posted second quarter results that came in line with estimates, while revenues have come in at a little over $311 million. It's the net income that has plunged to about $3.1 million, and that's largely due to a one-time debt write-off of about $51 million, that is during the quarter. The company is pretty bullish about the demand and business pipeline going forward. Let's take it across then to IGATE CEO Ashok Vemuri, who's joining in exclusively from New York. Ashok, good evening. Thanks so much for talking to us. Let's begin by understanding the performance as far as the last quarter goes. Revenues have come in line. What were the drivers, and what's your outlook for the current quarter?
We are very happy with the results that we've had this quarter. It's on the back of many of our large deals kicking in, much more effective client engagement and mining. And I think our industry solutions, the verticalization, the domain-specific industry solutions are finding very strong traction in the marketplace. And I think that is on the back of the hard work of my team, the new verticalized structure, a significant increase in domain competency has allowed us to exceed, if you will, the analyst expectations.
Well, you know, the ISG data released yesterday indicated a very strong macro trend for the IT companies in terms of deal pipelines. Does it mean that the second half could be much better how the first half has been?
Yes, I think we have said this quite categorically earlier today as well, that we believe that our second half will actually be stronger than our first half. We do anticipate to win a healthy number of the deals. We announced one in the previous quarter. We believe ourselves to be very well placed in two of the other three large deals that I had talked about in the first quarter. We're finding traction in the European market, albeit a smaller market for us, but we are finding traction which is resulting in our confidence with regard to the second half of the year.
But your net income did plunge in the second quarter due to a one-time write-off of about $52 million. Does it mean that the profits may actually rebound from the next quarter onwards?
Yeah, and I think it's important to understand what has happened here. We have, for once, successfully refinanced the high-yield bond of $770 million, which was at 9%, which we had placed at 9% interest in 2011, with a $685 million at an average cost of about 4% on the back of the rating upgrade that we got. So in the quarter, our normal interest expense was $12.2 million, while we had a one-time interest expense, as you rightly pointed out, of $51.8 million related to the refinancing exercise. Now, what this essentially means is that Q3 onwards, the interest cost for us will be $7 to $8 million, as against the $23 to $25 million interest cost that we've been paying in previous quarters.
You know, you seem pretty bullish about the overall demand. So would it be fair to say that IGATE is on course to beat the NASDAQ estimate of 13 to 15%?
You know, as I've said in the past, we don't hold ourselves to any artificial pegs or benchmarks out there. Our endeavor is, and with the support of my team, our job is essentially to be able to jump the bar that we have set for ourselves on quarter. And I feel very confident and positive that we are able to bring that our structure, that our value proposition, our client engagement and relevancy, and the traction that my team is building in the marketplace, we will be able to grow our revenue and margins in a very healthy fashion.
All right.